There's only 5 months left to say goodbye to the year 2021 and welcome 2022. Even if you weren't able to secure a better position in diversifying your portfolio, you still have the chance and option to make it right. 2021 is not over yet, and not to mention, significant tokens like Bitcoin, Ethereum, Dogecoin, and many more are expected to boom. So make sure to watch this video till the end to optimize your investment portfolio. Hello everyone, welcome back to the channel. If you are new here, make sure to drop a like, subscribe to the channel, and don't forget to press the bell icon to get notified whenever we post a video. In today's video, we are going to be talking about a few of the most essential pointers that you all need to make sure of when you are looking forward to investing in cryptocurrency. But before we jump straight into the video, there are certain things you need to keep in mind. The crypto market is highly volatile and is frequently changing. Therefore, by the time you watch this video, the token price would have switched to a whole different range. In addition to this, the information shared in this video does not in any manner intend to be taken as a piece of financial or investment advice. The content in this video is so curated to suffice the purpose of being informative and educational. Therefore, you are requested to conduct your due diligence or consult an expert in this regard to make better investment decisions. With that being said, let's get into it. The crypto market is indeed volatile, and that is the entire reason why you need to be aware of the market trends, inclusive of every minute detail. For example, Bitcoin is one such token that we thought could never drop since it has already reached a certain height. However, if people were to be negligent of the market and still had persistently kept holding Bitcoin after it had plunged to almost half of its value, you already must have experienced the terrible regrets these people have been going through for not keeping up with the market news and burning topics. Therefore, always keep in mind that whenever you are investing, you need to be alert of the market and that indirectly related information to your crypto for being able to take out your money without getting affected much in case of a mishap. The same applies to either side as well. The more you would know, the more promptly you would be able to predict the immediate step from the current one. It can be called nothing more than a habitual study and eye on the market. This is easy, but is a rare talent that would help to determine exactly where and when you need to invest. On this, let's take the example of Dogecoin. We already know that this meme coin has gotten a lot of unreasonable attention, but does that mean it will stop trading higher? Well, for a fact, it is known by all Dogecoin would trade in green anytime soon, and only has the question of when. It is because Dogecoin is not a normal token anymore. It started as a meme token and has become nothing less than a celebrity. Not to mention, this token is backed by none other than the tech billionaire Elon Musk. On top of which, we already know that Musk is working on improving Dogecoin's transaction efficiency. Therefore, whenever Musk updates or drops the slightest hint about the same, Doge will skyrocket. Therefore, in every periodical, you must have gotten a few hints to upgrade your portfolio that could help you optimize your returns. So, what is a crypto portfolio? Since cryptocurrency is a relatively new concept, do not confuse it with a mainstream financial portfolio. A crypto portfolio is the rightful allocation of all your investments into cryptocurrencies. You can call it your investment storage, which determines how much percentage of the total budget a particular token holds. In simpler terms, a crypto portfolio will be a collection of different assets. It is on you if you would want to give crypto a particular portion of your overall portfolio, or only keep cryptos as a whole different portfolio if you are not investing in any stocks. However, while building up a crypto portfolio, you need to think much ahead and make sure to note that a certain pattern used for creating a portfolio will not last you long in the game if you don't change it according to the market demands and needs. Cryptocurrencies are largely volatile assets because these currencies can make quick gains and can roast your rooster to charcoal as fast if your finger is not on the proper dial. Therefore, these assets are new and will have a significant impact on the market, increasing its volatility. Bitcoin, which is the largest and biggest cryptocurrency in the market, is considered to be the least volatile crypto among the entire crowd of altcoins. Because Bitcoin has already risen above the growth boundaries of the market sphere, leaving very little room for practice growth. However, Cryptocurrencies like Dogecoin and Shiba Inu are highly volatile because they have negligible fundamental value. They can grow to an exponential level and can even fall straight into the pits. Since the market is booming with new cryptocurrencies every year, it is not difficult to see the proliferation of many different tokens. This gives the potential investors a vast opportunity to buy inexpensive tokens at the start and hold them once they start getting active and noticeable in the market space. Therefore, through this, you can get good returns within a brief period of time. Since you must have already gotten the idea of cryptocurrencies and their market, let's see how you can start trading in cryptocurrencies. At the time when you have decided to enter the market, you have some budget constraints. You will need a broker to help your way out. Such a reliable broker is true, both crucial and challenging because they lend you the money to leverage. But here's the catch. The broker will require a margin, which is a kind of deposit to protect himself from the losses. One of the most essential and most heard pieces of advice that you can get while building up a new crypto portfolio is diversification. Yes, even though we have been hearing it several times, most of us fail when it comes to its practical application. Diversification is the key to maximize your returns and minimize every possibility of loss. In short, it would mean the same as putting all of your eggs in one basket, quite a risky task. If you are diversifying your portfolio, that means you would be creating smaller sections of your investment for several tokens or assets and not investing a huge chunk of investment in one single asset. This way, you can minimize the risk of losing your money. For example, you had invested all of your money into Dogecoin when the token was at its peak at 74 cents, and the token fell to its lowest at 16 cents from that height, resulting in a considerable loss. To avoid this risk, it is advised to diversify your investments into smaller lots for a lot more tokens. How well do you need to research? To this question, there is no definite answer. The closest answer would be the more you research, the more handsome returns you are likely to get. On a personal note, we'd like to advise you to research more into those tokens which are not mainstream yet. Obviously, you must be aware of the crypto world, the influence of fundamental news on some cryptos, and, as regulation has recently been the primary catalyst for cryptocurrency volatility, the impact of regulation on crypto's pricing. If you decide to get into cryptocurrency trading, read everything you can. Connect with Reddit and follow some cryptocurrency investors and analysts on social media. Connect to Reddit and look for a broker who can provide you the finest terms. Your profit depends on your trading skills and discipline after that. Token sales are a terrific opportunity to get in on the ground floor of ICOs that you believe will attract a lot of attention. An ICO is a tokenized business that uses crowdfunding to fund its future operations. The first thing you do when you learn about a blockchain startup and its investment opportunity is read about how the business will operate. What are the issues it aims to solve? Are there any better options? Who is working on the concept? You can now invest in the token for long-term holding or until you can reap a specific return once you are satisfied that the idea you are backing will generate interest. To make sure that you are not losing out on your portfolio is to make money from ICOs. However, make a note of certain things before investing in any ICO. You are required to read the white paper thoroughly and invest only if the token converts at the ICO. Also, keep in mind that almost all new cryptos are more or less doing the same thing, so finding what would be best for you might seem a bit hectic, but keep searching if you want to get hold of that extra income. For starters, it is always profitable to start small, learn, and grow your portfolio with time. That is all for today's video. Thank you for watching. Smash that like button, subscribe to the channel, and don't forget to turn on the post notification to always stay updated. Let us know in the comments below which crypto you are planning to invest in first. And we will see you all in our next one. Till then, keep investing.